Welcome to GP Bullhound's Tech Thoughts, a weekly overview of economic developments in international markets. Hello, this is GP Bullhound's Tech Thoughts. Today's the 22nd of April, and we're here with Inge Heydorn and Nela Salkovic for our weekly market roundup. In today's episode, they will discuss Q1 results across the board, as well as updates on Netflix, ASML, Lam Research, Tesla, and Snap. Lastly, an update on gaming. Over to Inge.
Quick market update. The reporting season is now in full swing, but with that said, the focus in the market is still on the macro and the interest rates and the inflation. So even if we look at the reported companies like Netflix and so on and listen to the conference calls, the main focus is on the macro questions in those calls. How are the consumer doing and so on. So going over to reporting season for this week and the results, let's start with Netflix. A shocker really coming out that they had negative subscriber growth in Q1, even excluding the drop-off of Russia. And that together with the guidance for a very negative subscriber growth even in Q2 really took the market by surprise. And as you saw, the market traded down quite heavily on top of that. Also remember then HBO had a plus 3 million number in subscribers, adding it to 77 million in the end of Q1. That came yesterday, but that also puts Netflix performance a little bit in context. Going over to the semiconductor side and equipment side, which is really a key investments, so it's a theme for us. ASML and Lam Research were in the same camp. Demand extremely really strong, and they can't fulfill the orders with capacity constraints on components and so on. So Q1s were really in line with expectations. Q2 guidance from both companies slightly weak, and also feeling some pressure on the margins due to the constraints and the increased cost of shipping. But both stating demands are really strong, and ASML is even increasing their forecast for 2025 to 2030 and increasing capacity for it. So the long-term growth is really there. And if you look at Lam, sales were around 4 billion, but 600 million was not recognized in the quarter. Adding that back, they would have had a blow-away quarter, but they couldn't recognize the sales because they didn't have all the components to do that at the end of the quarter. So second half 2022 and 2023 will also be strong given the strong order books these companies have. And also if you look at the plans for the investments of the semiconductor producers, we believe we're going to have strength in this area at least 2025-26. None of these decisions are taken short term because building a factory takes a lot of time, and is also very important in terms of relative competition between the vendors to have the technology in place, as you probably know, given where Intel is at this point in time. Going over to SAP. SAP numbers came out this morning, I would say bang in line with expectations, but the interesting thing here is really that the cloud revenue starts to accelerate further, and that's the key thing. The order book on cloud is now up 23% year over year at 10 billion euros, and as we stated, the cloud execution continues to be doing well, and that's the key. They're keeping all the numbers intact for the year, so top line, cloud growth, EPS and so on, and that's really strong given that they're taking major write-downs on the back of the war in Ukraine and the closure of their business in Russia. So that's really good news. So over to you, Nela.
All right, thank you. And starting off with a Q1 update on gaming, the activity shows the underlying health of the industry, I would say, which is boosted by continuous investments and acquisitions, as well as huge changes coming as industry consolidation happens across all gaming sectors of PC, console, mobile, and esport. But there were, of course, some red flags as public offerings slowed down because of volatile stock market and the war in Ukraine, and of course, macroeconomics conditions. While valuations for most public gaming companies have corrected over the last 6 months. And earnings season is slowly starting. Shares of Corsair Gaming were down last night after the company said first quarter revenue was lower than expected. Revenue was lower than expected mainly due to short-term slowdown in consumer spending in Europe and with increased inflation than expected. And of course, the Russian-Ukraine conflict that has put a strain on consumer confidence, according to their CEO. And I mean, we've seen similar words from Snapchat, who reported last night a double miss from Snapchat, but they still managed to grow their daily active users at 18%. And despite the miss on earnings and revenue, the stock were up after hours. However, Spiegel blamed some of the Snap issues during the quarter on macroeconomic conditions and, of course, the continuing challenges related to Apple's 2021 privacy change. And this is something I really want to highlight in mobile gaming as well for Q1. Apple really created huge problems with the privacy settings and therefore created a big problem for downloads. Looking at the overall picture, Q1 was really not a good quarter relatively to previous Q1s for mobile gaming. And I mean, this does not really come as a surprise, as we've seen downloads down for the last 6 months. This is obviously what happens. Less traffic in your store, less revenue is what you're going to get. The impact is really being felt, and I really believe that this is going to get worse, and we get more deprecation of IDFA, fingerprinting removal. All this is going to create a situation where we're not getting people to download. So from an industry perspective, I really believe we are in a tough spot. And for example, if fingerprinting gets removed, AppLovin, Iron Source, etc., are going to have a really hard time. So yes, earnings season this quarter is going to be super interesting to go through. Thank you for listening and see you next week. Bye!